stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by Zacks Associate Stock Strategist and the editor of Zacks Income Investor Portfolio, Maddie Johnson. But we're not talking about income stocks today, though we should do that at some point, but not today. We are talking about retail stocks, our other favorite topic. And today is kind of interesting because we're going to talk about the stocks that are trading under $5. There's quite a few. We had to find the list because there's a lot that are under $5, and I'm getting a lot of questions on Twitter about whether or not people should be buying some of these. It always seems cheap, any stock under $5. You have this like dream in your mind, like, oh yes, I'm going to buy that $1.45 stock, and
I'm going to get in on the ground.
Yes, and no one else knows about it, and it's not just going to go up to $3.50 and like double or whatever. It's going to go to like $5, $6, $8, $10. And that's quite a good return if it does.
Yeah.
So these are kind of like the lottery stocks. They're always the dream. Plus, you can buy a lot of shares of it if it's $1.50 or whatever it's at, and that makes it seem more fun too. It's not like buying, sad to say, like one share of Amazon or something. Sure. We can buy like 2,000 shares of one of these guys. So we are just focusing on the retailer ones that are under $5, but we get it. And retail also has that like component where you maybe shop at those stores. So you feel like a connection to it too. And you're like, no, my favorite store is not going under.
But also shopped at them for a long time.
Right. Some people for sure, for decades, in fact, even. And so that might skew your investing outlook too, to some extent.
Definitely.
So we did put together a list of stocks that are retailers trading under $5. Some of these are interesting too because they've just been announcing what's been happening over the holiday quarter. Suddenly, they don't have to, but they're like pre-announcing. Pre-announcing. Some of them are announcing other things that aren't so good, like more store closures, various things that they just want to get out there. New year, new news.
2020 vision.
Yeah. And so some of these have plunged back down. So let's just dive right into some of the ones that are in the news right now.
Yeah.
I want to start with Pier 1 because that is one of the ones that suddenly came out with new announcements. So they are closing another 450 stores. They said sales and margins remained under pressure in fiscal Q3. The comps were down, I think I have here 11.4%. But I do have to say this in their defense of that comp, which is bad. But that comp was impacted by 650 basis points. They said by a shift in holiday selling days from the prior year, and that's going to shift back in 2020, this next fiscal year. I'm presuming that is a result of 1 week shorter in the holiday time period. It is impacting the comparables from the prior year because a week is like everything for any retailer, for any quarter, but certainly in the holiday quarter. And, this was the latest Thanksgiving ever. And so some of them got off. If they didn't get off to a faster start, then the comps are like really showing it. But still, even if you strip out 650 basis points, still pretty negative, but not as bad as 11.4. Because I saw that 11.4 and I was like, wow, Pier 1, that's not good. Because this holiday season was one of the best in recent memory. But a lot of these comps we're going to talk about here were not so good. So that it does make me think, like, where was everyone shopping? Not at these stores, apparently.
No. And I mean, you and I go on Michigan Avenue all the time during the holiday shopping season. And this year, especially, that you couldn't move without bumping into someone.
Yeah.
It was very busy.
People were definitely out. And we saw the numbers are showing that they did spend.
Yes.
So, but where and with who, we don't totally know. So in Pier 1's defense as well, they have totally new management now. But this is like they've had no management. Now they have new in there. We have no rank because there's no coverage on them, I don't believe. And aren't they? They're like super small, market cap of 16 million now. So their shares did go below $1 at one point. Then they did a reverse split even before this news came in.
Yeah.
And now they're back under $5 at like I have 380 when we're recording this. So what about Pier 1? I don't own it. I used to watch it because I did like the store. I have bought things from there, but we've both complained that they have lost the millennial shopper.
Oh, definitely. And it's also, I think the problem with Pier 1 is you can get almost everything at Pier 1 at
somewhere else.
Yeah. So for the millennial shopper, I mean, West Elm and Article and Interior Define and CB2, Crate and Barrel, like those are, I should say, urban millennials specifically really like. I am one, so I really like those furniture brands. But like Pier 1, there's only one store in Chicago. I feel like I know them as the retailer that has sequin pillows and like and kind of overpriced furniture that isn't like great quality. So I'm like, I'd rather spend my money elsewhere.
Right. So yeah, the millennial shopper, they never went into mid-century modern type of furniture there, which I thought they needed to do to compete with West Elm and what's hot. It was still the old style, but and then they said they were doing a renovation. They spent all this money on marketing to figure it out. And then we did get the sequin pillow again, as you mentioned. So I don't know what new management is going to do. But I'm staying away from these shares. I do look to see where the insiders are buying. And so I have been tracking this one for a year or 2 years. And there hasn't been insider buying in years now. And so if even the directors, the new management, doesn't go in, hey, for them, it's $3.80 too. Why aren't they buying, 2,000 shares or whatever? But they're not. So I'm staying far away from Pier 1. Okay. So we're in agreement on that one. Okay. Switching over. What else do you want to tackle? What's next on the agenda? Should we do GameStop? Because they just kind of reported.
Yeah. Let's do poor GameStop.
Okay. But I might not be quite as negative as you.
Okay. I mean, they were down over 50% last year.
Yes.
There's just so much uncertainty and bearishness around its turnaround plan. And then they cut its dividend. But honestly, the dividend was really high, and income investors now, high dividends don't necessarily mean great things.
Right. Could be a warning sign.
And I was reading today that it could still be it could be bad for a little bit more while. That doesn't make sense. But because a lot of new consoles, like the new PlayStation, the new Xbox, are only going to be debuting like mid to late this year.
Yes.
So a lot of gamers are not buying anything until those
Why
launches.
would you?
Right.
Yeah.
I mean, why would I
waiting.
buy a game and I want to spend X amount of money on a new Xbox?
Yeah. So yes, this is part of their problem, which is why I'm not quite as negative on them as some other people.
Yeah.
The people who say, oh, they're the next Blockbuster and they're doomed. Yes and no, because the new console, at least what we know from PlayStation, is that it will not just be solely streaming, that kind of thing. There will be physical games still. So everybody has been holding off. As you said, I took a look at these comps that they put out, preliminary comps for the holiday quarter, and they said new hardware was down 45.8% because, again, you're not buying any kind of console now.
No.
Why would you? That would be dumb. I'm surprised it's not down even more than 45, but so someone must be. So sorry for you people who maybe your old one broke down and you're desperate, so you have to buy one. And accessories down 13.4, software was down 32.6. Collectibles has been positive the last couple of quarters, which is an interesting category, but it's so small overall. But at least there's something that is growing, and that was up 4.3%. But at least they do have something in the stores.
Right.
But also, interestingly, is their finances. As you said, they did get rid of the dividend, but they're buying back shares. They bought back a third of their total shares now.
Okay.
Some people believe maybe, they'll just buy them all back and go back private, maybe. I don't know what the end game on that will be, but they do have the cash flow to keep doing it.
Okay.
And they now have $419 million in long-term debt. And that's been reduced by $401.7 million. So they've reduced it almost in half of their long-term debt. So that's good use of the money as well. But people still believe they're the next Blockbuster because eventually everything in the gaming world will be streaming. Why do I need to go to GameStop? I might not need to.
Yeah, I mean, I'm more or less in that camp. I'm not a gamer, but huge movie buff. I love watching movies, but I don't even. So I live in Rockford, Illinois, and there's a chain of video stores called Family Video.
Yes,
that you can still go.
I still know those. Yes, all over
rent,
Chicago.
Exactly.
Yeah, they're still there.
Right. You can, DVD selection, Blu-ray. So there are options for that, even though Blockbuster has died.
So what does that imply? You're implying that GameStop may survive then?
It may, but it almost like it will survive in certain areas.
Okay.
Like in certain regions, maybe.
So what do you think about it here? It is back under $5.
I would stay away until the turnaround plan.
Okay.
Really, I mean,
until the console comes out, maybe?
Yeah.
That's a whole year away almost.
So
the stock may not do anything until the consoles come out.
Yeah.
Okay. So that's just an FYI for you investors out there. You're going to have patience. This is not going to be, there's not going to be a quick fix in the next couple of months.
If you are an investor or looking to buy now, it's like just like you said, you have to go into that investment knowing that the next year possibly could be super bumpy or just nothing.
Right. Okay. So that's GameStop. GME is the ticker there. Pier 1 is PIR for those of you.
GameStop is the number 3 hold.
Is it?
On the Zacks rank right now.
So that's not, at least it's not a sell, but
yeah,
we'll see what happens now that they did their prelim numbers. Some of that might change, but we'll see. Okay. Apparel's got to have some under 5. Of course it does. Let's talk about Express.
Okay.
That one's under 5, but
in just under 5.
Yeah. It was trading at 480, but this one has staged quite a recovery.
It has.
It was in August of 2019 at $1.88. So this is the lottery stock. If you had bought then, you've more than doubled your money. So how much more is in the fuel tank here? We don't have a P because the earnings are in the negative. But comps they gave us on December 5th for the third quarter were down 5%. It's not awful. That's not technically the holiday quarter yet.
Yeah.
And then, I take that back. Fourth quarter comps, they did guide down on the guidance of 1% to 3%. That's not bad either. But again, one of the better holiday seasons, maybe they did better than what they were expecting, and maybe they were conservative there, but they are, missing a week of sales as well, like we've talked about earlier. But it was down 6% the prior year for the holiday quarter.
Okay.
So that would mean a comp of almost down 10% over the last 2 years. They are doing a share buyback, so they have some money. They have $168 million in cash and no debt. They're having an investor event on January 22nd, 2020 of this year. So they're going to provide more details then. So investors.
Yeah. And they have a new CEO, Tim Baxter.
Okay.
Mid last year, I think he was brought on. So there is some optimism around about his big turnaround plan, with product and especially marketing. I think that's really key for any mall-based retailer.
Huge.
If you can reach customers that have just stopped going to malls, then you're definitely doing something right.
Right.
But
it's so trend oriented on
is.
these kinds of retailers. And for some of the years, Express has been totally in trend. They had that great jeans collection a couple of years ago.
Yeah.
But then the consumer gets fickle or moves on to the next trend. And if they get it wrong, then they're punished.
Right.
And that's how we get $1.88 on these shares. But I do feel like some of the turnaround in the shares is already priced in. I'm not sure, why am I getting in here? Is it really a $10 stock at this stage? I don't think so. Not yet. But I await more data, more details at this investor day. Maybe they'll have some surprises.
Maybe. And I mean, it would be nice to see kind of this like stalwart mall brand be able to turn around.
Yeah.
It's Strong Buy on the Zacks rank right now.
Okay.
So
it's a number one?
It's a number one.
Wow. Okay.
I know. So, and I shopped there a lot in high school, but when I stopped going to malls, I stopped shopping.
Right. But hasn't everyone stopped going to the malls? This is their problem.
So if they can, kind of like what we talked about with marketing, with advertising, honing in on those trends and growing their e-commerce presence. I mean, the world is kind of theirs. It's like at their feet at this point, you know?
Okay. Yeah. All right. So it's not totally doom and gloom for them. I like that they have no debt. That's a huge positive.
Yeah, which is the opposite of JCPenney, where they have literally an equal amount of assets and debt. So
let's talk about them. JCP is the ticker. I get asked about them all the time because it's just been down for 5 years now. They're back under $1, unfortunately, again. They were under it, then they went above it on some of the better news. Now they just announced holiday comps down 7.5. But if you take out the furniture and the appliances, down 5.3. So not awful. They have gotten rid of furniture and appliances. That's why they're stripping it out now. Still fairly new CEO in Jill. Mm-hmm. She's maybe had a year and a half now or so, maybe 2 years, not quite yet. So her vision is still taking shape.
Yeah. And with retailers, these like new visions from the CEO take years, I think, to really see like the positive effects. So.
Right. Because product is ordered months or 6
seasons in advance.
Yeah, in advance. So even though, they just got rid of the furniture, that, took a couple quarters just to get rid of that stuff. So I'm still giving her some time. They're doing like a test store down in Texas. They're not saying they're going to roll out some huge new concept, but they needed these stores to try out how things are working in their turnaround plan on the consumer. So they are feeling positive about those things. But shares back under 80 cents, what else could you have owned over the last 5 years as you're waiting for these shares to turn around? This is where the lottery thing can really trip you up. Seems like, all it needs to do is get back to 160 and I'm doubling my money. Well, yeah, but when was the last time these shares were even at 160? It's been a while now. And again, there's no guarantee they keep with these negative comps, and the department store area is very difficult right now. So
and giants like Macy's, Nordstrom, Dillard's, they're having just as tough of a time. But the customers still remember them.
Right.
It's I feel like JCPenney has been kind of just left behind on this like lonely dirt road of retail evolution, so to speak. And it's just like, well, what can I get at? I can get the same thing at Macy's more or less than I can at JCPenney.
Right.
And there's just no reason for me to shop there anymore.
Yeah. So I'm negative on JCPenney as far as buying it here at these levels. And the insiders haven't really been buying in either. I think the CEO made at least one confidence buy in there.
Yeah.
But it's not like the board is diving in and, the head of marketing that they've hired and all this stuff is buying up the shares because they see bargains. So I always look at that because it's a key indicator. If it's really that cheap and the turnaround is working, they will buy in, and they're not. So I'm out of that one. There's other ones I'd rather be in. So let's talk about a few other ones. J.Jill. Took a look at them, ticker JILL. This is like Express, but for older women.
Yeah.
Basically. Also pretty much mall-based.
Mall-based and catalog-based.
Yeah.
They only IPO'd like
a couple years ago.
3 years ago, maybe. So they're a new kid on the block, if you will, of publicly traded retailers.
It's not been going good, though. They're down to $1.29 right here. And they fired their CEO now.
Wow.
Yeah, so she's out. And so they're in a transition, but they did just raise their comp guidance. They're another one who just came out with some of the holiday comps. I didn't even see this. It was just recent. And fourth quarter comps only decreased 6 to 8%. They were expecting 8 to 10. So that's good. But they did lower their earnings slightly to 10 to 12 cents versus 14 to 6 cents that they were expecting. So there must be some other costs related in there why they had to lower those even with the better comps. But yeah, J. Jill, I don't know, here at $1.29, I feel like that brand is strong with its shoppers.
Yes. When we were talking about this earlier, I had mentioned Eileen Fisher. So like it's like that same type of woman, that same type of shopper.
These clothes aren't cheap.
They're
good
not.
quality.
No. And so I feel like with like I just picture my mom, like she's a huge fan of Eileen Fisher, so and J. Jill. So when you find a brand and you find a style that works for your body, for you,
right,
you're gonna stick with it.
Yeah.
And I feel like that's the case with the J. Jill shopper.
Yeah. So they just have to they'll have the new CEO in there, get back on trend. A few issues they had last year was having the wrong colors in stock. I think, what was it? They had too much brown or something one of the years, or too much black and not enough. I don't know. There was like something with the colors, so the shoppers didn't buy anything. So even, it's weird to say, but a little thing like that can totally just blow out your quarter.
I mean, before Lulu was on its current rampage, there was a collection a few years ago that was, I think, all muted taupes, grays.
That was not good.
It was just no color.
Yeah.
And it really hurt them for a while. This
is why it's so hard on the apparel side. Okay, switching to another apparel, Ascena Group. I did take a look at that one. Where are they now? I'm looking through my notes. Oh, Ascena, ASNA. This one's over $5, but it's kind of a fake out because they only just recently did a reverse split like Pier 1 had to do.
Got it.
It was a 1-for-20 reverse stock split at the start of this year. So they're trading at $6.76 now. I always thought these shares were oversold, but it did make me nervous when they went under $1 because they can be delisted if they're under $1. That's why they do the reverse split. So now they've done it. They're not getting delisted. They said first quarter comps were flat. This is their last report on comps, so not really holiday yet. And excluding Dress Barn, which was up big 10% because they're closing all the Dress Barns, so they're reducing all the prices. People are like flocking to Dress Barn to get
when
to
you
get
see
deals.
An 80% off clearance.
How could you not do it? So comps really down 2% if you exclude those shoppers, but inventory down 5%, which is what you want to see.
Definitely.
And they have $680 million in cash and in their revolver, and their next quarterly loan payment isn't due until November 2020, and it's just $22.5 million. Okay. So they have $417 million in the revolver just sitting there. So it's not like they won't be able to make that payment. So everybody is nervous, like, oh, is this the next one to go under and all that? But they have plenty of cash on hand. So who is Ascena Group? The name is just weird. But you know the brands.
Not as weird as Retail Wins.
I know. That's true. 100%. But you can't figure out the brands from Ascena.
No, you can't.
I don't know what that means. But the brands we all know. So they have Ann Taylor and Loft are their premium brands. They're the biggest group, $585 million in the last quarter in revenue with just those two brands. Then they have Lane Bryant and Catherine's in the plus sizes, very popular as well. $279 million of the revenue. And then Justice now for the kids, $254 million. And then they're getting rid of Dress Barn. They've sold all the other brands. So this is it. They now have just 5 brands. I like that because now they can focus on what is working and what isn't at each one of these. And Loft has been kind of their premier, flagship, I feel, for a while. It is their biggest brand now, I believe. Those comps were down 2%, which isn't awful last quarter. The only positive comp they had was Lane Bryant +2 in the last quarter, but that was prior to holiday. Okay. So now we'll really see, but again, it's all about the trend. Like, are they in the right colors? Do they have the right style? Is the athleisure at Loft selling well? They have Lou and Grey.
Lou and Grey, yeah.
They have that brand through Loft. And, I think they've figured out online sales. Even Ann Taylor is very, it's smooth now when you're buying online. But I don't know about these, but the reverse split, I haven't seen anyone buying in there, but I haven't looked recently. I would need to go back and look now that they've done the split. And then we'll see when they report this next holiday if anyone is diving in there too. But what do you think about Ascena here?
I think it's almost reminds me of like a Banana Republic, right? Gap.
Yeah.
Where I think right now the collections are good.
Okay.
I went into Loft recently on Michigan Avenue. It was busy. I mean, it is it's a big store.
Yeah, it's big.
And it's just they're more or less hitting the mark on like the current trends.
Okay, that's what I think too.
And I did want to buy things,
Okay.
but I just kind of went in there to
Wow.
browse.
Yeah.
So, and I don't think I've said that about Loft for at least a year.
Okay.
So
they might be on trend here. We're going to have to wait and see.
And honestly, Ann Taylor is one of the few low to mid tier options for women who need business clothing.
Yeah. Suits.
J. Crew they're privately
do.
owned. They still have like a suit collection. Banana, I think has decreased their product selection of like blazers and pants.
Yeah.
But Ann Taylor hasn't. You can always go in there and find professional clothes for your office.
That's what I always see women trying on in there. And
it's
they
Ann
like
Taylor.
literally say like, I need this for a job interview or
Right.
whatever. Like while you're in the dressing room, you can hear them talking about
And
it.
it's a lot of women my age who, I mean, my mom shops there. Like, so it's
Yeah.
like kind of like going down the family tree, so to speak. Like, oh, go to Ann Taylor for your first suit or something.
Right.
You know?
Right.
So I feel like that's something Ann Taylor will always have.
Okay. Yeah, I'm keeping an eye on on these shares after this reverse split. We'll see. But they get very little coverage. I'm not sure many analysts are even on it at this point. I'm not sure they even had a question on the last conference call. A lot of the conference calls kind of blend together, but on some of these that are under $5 or that, this one was until just recently.
Yeah.
There's not even hardly any analyst coverage. So that's it's scary too, because how do you get information then? They basically give the conference call and you have the press release and that's it. And maybe an investor day if they have one.
Mm-hmm.
So that's difficult too. So let's talk about one more, maybe Fossil, even though that's not under $5 either, but I kind of took a glance at them. They're at new lows of almost $8, just under $8. So that's pretty cheap too. Their last quarter wasn't awful, but net sales down 11%. And they did declare that they were disappointed themselves by what happened. They have stores and online, and then they make a lot of watch brands for other big brands. So people don't realize it's not just the Fossil brand. They do, DKNY. They do a lot of big upscale names. Don't they do like Coach and some of those in the watches?
They might, yeah.
Yeah. Don't quote us on that, but they do like a couple of the more upscale brands because they're one of the biggest watchmakers. A couple of years ago, the shares got hammered because everyone said the millennials will never wear a watch again. But I want to say that was like 7 or 8 years ago.
I'm wearing,
she's wearing one right now.
A real watch, guys.
Yes, and that storyline was wrong.
It was wrong. I mean, that was also like when the idea of the Apple Watch was like surging too, like the smartwatch, whatever.
Which they also do make.
They
now.
do make.
Mm-hmm.
But it's
why do you wear?
Why I do?
That's an old-fashioned style watch.
Yes,
I'm looking at it.
It's Kate Spade.
Okay.
I don't know. I don't know who manufactures Kate Spade watches.
They may Fossil may.
But again,
we don't know for
us.
sure. Yeah.
I don't know. It looks.
It
looked good with the outfit I put on today. And
but it's a piece of jewelry now, though.
It is
for men and women.
I mean, like a lot of people my age, I really just check my phone for the time.
Well, that's why everyone said it was doomed, but it's not.
But it's not. I mean, it's like it is. I almost treat it like a bracelet.
Okay.
But then it's a bracelet that can tell time.
Have you worn watches all, for the last several years then?
Yeah.
Okay.
I had, and another watch that kind of like died and I didn't like it anymore. But
Okay.
I've been thinking about upgrading to like a nice watch, like a Shinola or a Michelle.
Okay. That's positive news for them, or Movado.
Movado, yeah, exactly.
MOV is the ticker there.
So I don't think, and I still feel like a gift, like a graduation gift or a new job gift or whatever is like, you get a watch, right? It's still like that, that like mindset, right? It's almost like after 15 years of marriage, it's like China or crystal or something, like that kind of like storyline, so to speak.
So there, you heard it from the horse's mouth. A real millennial. Watches
we like watches,
guys. They're not doomed. Okay, they did have a little bit of trouble with the watch sales in the last quarter, but it's double-digit growth in Asia now for them, which is positive. That's not their biggest market, but there's some decent things going on at Fossil. I don't know.
Fossil still has leather goods, too.
It does, leather and jewelry through its stores. So retail sales were down only 2% globally in the last quarter. That's not that bad, actually, at their own stores. That's not wholesale. The wholesale numbers were worse, but a lot of that was watches.
Right.
So Fossil, we don't hate. We don't hate Fossil.
We don't hate Fossil.
It's still take a look at
it's still a good brand. Like you recognize the brand among like watches and leather goods. So it's just
okay. It's all about the brand. It sounds like on these.
I think so.
Do they still draw people to their Instagram account? Is it, it's still talked about? Do people even know what it is? These are all the issue. Because if you ask, do you know who Pier 1 is? A lot of people will say no.
Right.
Younger people have no idea. So that's the brand.
And the Instagram point is, I think, it like nails it on the head, because Express likely, I haven't looked at their Instagram account, but I bet they have a good presence there. But JCPenney, I don't know. GameStop, Pier 1, Fossil, I think does have a good Instagram presence.
Okay.
But again, what 14-year-old is searching for JCPenney on?
Nobody.
On Instagram.
Well, they do have good dresses there, though. So the 14-year-old might be going to the school dance.
Yeah.
Yes. But so JCPenney does have some of these things that could work for them, but they're still in the turnaround. Mm-hmm. And until those insiders decide, these shares are really cheap and I'm buying like thousands of them,
right?
Then forget it. Yeah, I'm not buying either. No, they have to believe for me to believe. Okay, so let's recap some of the stocks here that we talked about. It's been a lot. So Pier 1 is PIR. That's not one of our favorites. Express, EXPR, it's run up big, but we do like that story there. JCPenney, not as positive on that one. JCP, GameStop, we're kind of split. Maddie says no. I said, I might be taking a look at that one. GME, but you got to have a longer term outlook because those consoles aren't out until next holiday season. JILL, JILL is the ticker there. Is that right? JIL? Yes, it's just Jill. And new CEO coming in there. But I do, and Maddie, both of us like the brand still. Yeah. So might want to snoop around in there. Fossil, FOSL. Also might want to keep that on your short list. And Ascena, ASNA. I'm going to look and see if any insiders are buying there, but they just did that reverse stock split. So just over $5 with them. But if you're a fan of Ann Taylor and The Loft, you might want to put that on your list too. So a lot of stock ideas here. It's very interesting on the retail side out there right now for investors, and a lot going on for these stocks under $5. They are fun, so we will be covering them all year long. We'll check back in and see what's going on with some of these names, because I'm sure there will be a lot of news as the year goes on. So you don't want to miss a single episode here at The Market Edge. You can get us on Apple Podcasts, and I know a lot of you get it there. We're on SoundCloud, of course, and we're on Spotify now. So be sure to subscribe somewhere so you don't miss a single episode, and I'll see you again next week with some more stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.